Hi traders, Tony Sycamore here. I've been asked by clients exactly how we use the TECHFX TRADERS reports to place trades. How do they know which analysis involves a trade idea and how do we know which is just providing a general overview of where the market is? If we turn now to an example of one of our reports, this is dollar yen, and you can see the analysis here finishes with a short-term summary. And this outlines our bias, whether it be bullish or bearish. In this example, it's bearish. Sometimes we're neutral, we don't have a high conviction view. And what essentially is happening here is the market is lacking a key ingredient to placing a trade. It might be an entry, it might be a stop loss. The risk reward might not be good enough at the current price to trade an idea. So at the end of the day, we're keeping a bit of a firm view on where it is, but it's lacking that catalyst to actually trade a trade, to take a trade. Now, if we zoom down to the Euro Swiss chart, at the end of this analysis, we can see that there is a trade idea contained. Now, the trade ideas are when I have a strong technical view and the position of the market is displaying a high probability, high conviction setup. We get a combination of a nice entry setup as well as good upside potential. And most of all, there is a spot where we can define our risk. So it gives us an acceptable level of capital exposure downside in the trade. And these are the trades which I am taking myself. So for example, in this Euro Swiss analysis, you can see there's two ideas and it is either or. So whichever comes first, not both. So in a nutshell here, we're looking to buy Euro Swiss if it was to break above these highs here, 108.38-ish, we would enter on a stop entry. So we only want to go long in this example if Euro Swiss was to break above 108.45-ish. And we would add to that position if the daily close was above 108.50, i.e. if it confirmed the break. The other option is if Euro Swiss pulled down back towards this support around 107.12, I see a band of support, generally speaking, 107.30, 107.10. If it pulled back into that band of support, I would be a buyer. So either of those two buy entries I would be willing to take. Now, we are pretty specific with regards to our entries. It's important to remember that a good trade idea is comprised of a good idea, firstly, but also good execution. And by that, I mean that you really need to be very accurate in where you enter your trade. So if we're looking to enter a trade at 108.46 and let's say we miss this particular entry, but the next day it's trading up at 108.95, for instance, and you decide to buy Euro Swiss then, you've basically got a good deal of slippage on your execution, on the entry of your trade, which means the risk reward of your trade has evaporated from what was originally outlined. Now, I'm not saying the trade isn't going to work because of that. It just means that your probability or your edge has been eroded. So you need to be very, very disciplined in trying to get the entries as close to those levels that I outline on the reports. The second part of the trade is where we get out. So I always include a stop loss. You will see the stop loss should be placed at 107.65 in this example. The stop loss should be placed as soon as you've entered the trade. The profit target, I leave more discretion around. And you can see here in this example, I've given a target area. I think exiting trades is the most discretionary part of trading, and I expect that you will need to exercise some discretion as well. Keeping in mind, we're only publishing these reports 3 times a week. Now, with the Euro Kiwi trade we recently recommended, we advised taking a long Euro Kiwi trade on a break of 175-ish. That was quite clearly outlined that it was a trade idea. The trade played out pretty much well as we were hoping. Euro Kiwi rallied up towards 180. That was our topside target. In our reports, we suggested scaling out of longs ahead of medium-term resistance at 180. So by that, we are providing some discretion for you as it gets closer to that profit target to look to take some profit. You might take out 20% of your position or 30 or 50% of your position, but we're giving you the flexibility to take some profit off the table. So in this particular example in Euro Kiwi, it pushed up to 179.14, which after moving close to 400 points or 4 big figures, that's probably about where you would expect to be starting to take some profit. We also raised our stop loss. This is something we will do as well. We don't like seeing a winning trade turning into a losing trade. So our actual entry, as we mentioned, was at 175.15. We trailed our stop loss up from where it was originally suggested up towards 177.49. Now, this trade, you probably had the opportunity to take some profit above 179. And if you didn't, you certainly were out of that trade at 177.49 on the trailing profit stop. Hopefully that makes things a little bit clearer. If you have any questions, please feel free to reply to this email. Thank you for listening.